Here are 5 things that professional crypto investors do that you don't. And this is probably why you're not making money or not making as much money as you could be. So a lot of people hear about all this money that's being made in cryptocurrency, and they try to get in to get a piece of that, to get a piece of the cake. But most people, over 95% that get into crypto, lose their shirt. Why? Well, it's very simple. People that know how to trade are taking your money. See, for you to win money in cryptocurrency, somebody has to lose money in cryptocurrency. That happens with all trading platforms around the world, whether it's stocks, whatever. But the professionals have an advantage. They know more than you do. So in order to give you a chance, I'm going to tell you 5 things that professional traders and investors do that you don't. And I haven't seen these things talked about anywhere else on YouTube. Number 1, professional traders buy higher. Yes, you heard that correctly. See, when we look at charts, we see support and we see resistance. Support is when a certain price level holds, meaning price doesn't go under, it bounces off to the upside. Resistance is when the price goes up but doesn't get over that price. That's called resistance. Now, the cool thing is, once you break away from resistance, that tends to become support. So for example, let's say that Bitcoin is at $28,000 and the next resistance is at $30,000. Once that $30,000 breaks, goes above, comes back down to meet it and makes it support, in other words, it holds that price, that's when investors and traders get in. Because it's easy to put a stop loss underneath so you can get out automatically if the price goes under, but it's also confirmed that it's gonna go higher, or the probabilities are that it's gonna go higher. Does that make sense? The second thing professional crypto investors do is they do not listen to news. I know it's crazy because everybody seems to be listening to the news. All YouTubers are talking about the news. All TV programs are talking about the news when it comes to price. But usually this is in hindsight and they try to justify the price. They try to find the news. Well, professional investors know that there's news for the classes and news for the masses. You will never get the news for the classes. You will always get the news for the masses. This is why we don't pay attention to news. We pay attention to price and charts. Number 3, they never chase price. Unless it's a breakout, and even then, they wait for the price to come to them. See, they put their emotions to the side, like FOMO, fear of missing out. And they know that there's always another trade in the market. So for example, if you miss Bitcoin because it's pumping, don't worry, it will always come back down. But even if it's not, there's always a lag in cryptocurrencies or even stocks or anything else in other markets that you can get into. Basically, never FOMO, never chase price. Let the price come to you. Number 4, always take profits. See, most people in crypto get into a project expecting it to 10x, 50x, 100x. And that's fine. That's actually quite common in crypto. The problem is a lot of these cryptocurrencies either go obsolete, scam, get rugged, vanish, or end up being complete hype. And the price may not get to those levels. Now, if you take profits, you not only protect yourself and protect your capital, but you also make money. Remember, until you take profits, any winnings are on paper. Even if you made $1 million, you're paper rich. You're rich on paper, but it's not real. So you always take profits. And this can be as little as taking just 10% once you double, another 10% once you triple, quadruple, and so on. Number 5, they understand risk-reward ratios. Listen, you don't just blindly get into a cryptocurrency, a stock, a commodity, or anything like that. You have to evaluate your risk and your reward. Is it worth it? In other words, you calculate how high a stock or cryptocurrency can go, but also to the downside. evaluate it, and then see if it's worth getting into. Now you can do that in a couple of ways. I actually have a video on how to do your own research. You can click it right here. Or if you're very new at investing, you can also watch this video right here with 25 tips for beginners and intermediates. Subscribe down below, and I'll see you in the next video.